Hot loan interest rates for 2025 are set to rise, as instability in the global markets and a weakening economy are leading to decreased consumer confidence. And 2022 have seen a period of loose credit, but it looks like this could be set to change in 2025. Rates are expected to increase for homeowners taking out a loan, with long-term mortgage lenders likely to face the brunt of the new regulations. Businesses and others rely on lenders for credit, so with rising interest rates, their ability to access capital may be curtailed. With banks and governmental controls will no doubt play a role in steering the markets, property investors may be in for a surprise. The U.S. Federal Reserve will have a large say, setting reserve requirements that will act as a brake on the rate of growth in borrowing. Buyers of physical goods such as cars will also be affected, as dealerships will be forced to increase their prices. Interest rates are becoming less favorable for those that apply for fast loans, with the prime rate increasingly leaving borrowers with an exorbitant fee. Low-income earners are also likely to struggle with house prices, as the cost of loans outstrips their income levels. Small business owners with a large amount of debt can expect to pay higher rates, as lenders become increasingly risk-averse. Apartment sellers will be hit especially hard, as higher levels of competition and unstable market conditions act as deterrents for potential purchasers. Current estimates suggest that hot loan interest rates may rise further still, and could hit peak levels at the end of the year. However, as the global economy seems to be slowly recovering from the recession caused by the pandemic, there could be hope on the horizon. The U.S. government has proposed a raft of measures to help stimulate the economy and aid those in need. These steps may lead to a more stable housing market, allowing buyers to access favorable interest rates again. The Fed have already decreased rates twice this year, citing rising risk due to political events such as the U.S. presidential election. Despite every indication that rates will rise, it's still possible to get a good deal, as lenders look to get a return on their investments. Credit unions, private investors, and online lenders are all viable options for securing a loan at a reasonable rate. As technology advances, more funding options become available, and applicants can often receive a loan in a matter of hours. Some apps even promise to provide competitive rates, and are backed by major banks in the US and overseas. When shopping around, it's important to be aware of the different terms and conditions that come with each loan, to avoid any costly surprises. Consumers should also take a look at the additional fees that some lenders might charge on top of the interest rate, as many of these fees can be hidden in the fine print, or have insurmountable interest rates attached to them. Loan sharks should also be avoided at all costs, as these individuals will often use coercive tactics to ensure repayment. Moreover, any loan that a borrower can't pay back should be avoided, as this will lead to further financial trouble down the line.